Hi there, Brock Vandenberg, president of Talamar Financial, manager of Talamar Income Fund One. I wanted to put together a quick series of videos for mortgage brokers that were looking to get into the hard money lending industry or currently are in the private lending industry, brokering loans, and want to maybe build their book of business. And I wanted to talk about the top 5 reasons why you may want to consider getting into the hard money lending business. Before we get into the top 5 reasons, though, I wanted to talk about what is a hard money loan, so you get a basic understanding of what a hard money loan is, and then also how hard money lenders operate, because it's important that you understand that distinction so that you can successfully launch your hard money lending business. So first, a hard money loan is simply a loan in which the lender is less concerned about the borrower cash flow and credit, and more concerned about the real estate that they're securing their loan against. The term hard money simply means hard asset, and hard money lenders look more at a loan to value ratio. So what is their loan amount to the value of the property that is securing their loan? They're more concerned about that than the actual borrower income or cash flow. Now, that's not to say that a hard money lender does not consider credit. In fact, we do run credit reports, and we do consider credit as it is a good predictor of if the borrower is going to perform on the loan or not. So let's jump into the top 5 reasons why you may want to consider originating hard money loans. Let's go ahead and start with number 1. Well, this is probably one of the biggest reasons why mortgage brokers make that jump into the hard money lending side, and that's because loans close much quicker. In the hard money lending business, again, lenders are not so concerned about cash flow, so you're not having to submit cash flow statements generally. Credit is a quick credit check, and you can quickly come to a valuation on a property. Hence, those loans close much quicker. If you were to go to a bank, you're submitting cash flow, you're doing cash flow income ratios and whatnot. And so where a hard money lender can fund a loan in 5 to 7 business days, you may be with a bank that takes 30 to 45 days. That simply means that number 1, you have a little more certainty of close in terms of the duration. And number 2, you're going to get paid much quicker on originating a hard money loan versus trying to go through a conventional bank. Number 2, the market for hard money loans is huge. It's a multi-billion-dollar industry with some of the biggest private equity funds and banks involved. In fact, Goldman Sachs has its own private lending arm. BlackRock's got its own private lending arm. Most every big institutional banking firm has a private lending arm. And so it's huge. And the loan sizes can range all the way from your small size on the 50,000 up to multi-million-dollar loans. So there's definitely a marketplace that you can capture, and you can absolutely enhance your conventional brokerage business with the hard money lending business. And that, in fact, they actually work hand in hand, where you may have a loan that doesn't work on the conventional side, so you may have to go hard money with it. And then once they've corrected whatever issue they had, maybe with the property or the borrower cash flow or whatnot, you can take that hard money loan and then move it back into more of a conventional type loan. And there you have 2 loans, not just 1 loan. The third option that I really like is the ability to create relationships with borrowers. In fact, when you're in the hard money lending space, most likely you're going to be working with real estate investors, because most hard money lenders want to fund non-owner occupied business purpose loans. So when you talk about these types of loans, you're going to be working with real estate investors, and investors tend to be sticky. If they find that you can produce, if you can come through and provide them the financing they need, they're going to continue to come back to you for future loans. And that means both on the hard money lending side as well as on the conventional banking side. So I like it because you can create these relationships. You can understand what direction the investor is going. You may communicate or contact a new lender that might have a new loan program that might be a better fit for your client and get them into that program. But either way, you create these relationships and you learn more about kind of what their business is. Every real estate investor out there has a little different business plan, different product type, maybe they're flipping houses, maybe they're buying holding houses, maybe they're buying commercial properties, what have you. Each has their kind of own business plan that you can better understand and then really find some financing programs that really work best for them. Number 4, and this is another big one, hard money loans are really hard to shop. When you're out there pitching conventional loans, if you're off by 0.1% on a loan, you may lose that loan. In the hard money lending business, 0.1% is literally nothing. They're really hard to shop around as a borrower. So most of the loans that are going to be coming to you are really kind of odd situations. Again, the property isn't in good condition. The borrower is looking for a really short-term loan. They got to close quickly. And so, in the conventional world where you may be off 0.1 point, and that might be a decision maker for a borrower, 0.1 point in the hard money lending business is nothing. I mean, you're going to see big strata in pricing, big pricing differentials that are probably going to be a half to a whole point, a whole percentage point difference. So that's where it is harder for a borrower to be able to just take your offer and go shop it around to all the other hard money lenders. Because again, there isn't as many hard money lenders out there feeding that business than there are on the conventional loan. So you probably have a better shot with your borrower when you provide the pricing to them, assuming it's fair. The 5th reason why I think you should consider getting into the hard money lending space is just interesting. Okay, I'm not saying that doing loans for homeowners isn't that interesting, but it's pretty cookie cutter. Either you make it or you don't, and you're trying to find solutions. But when you're talking about trying to find a hard money loan request for a person that owns a commercial property, which you may not have any understanding of what commercial properties, how to even underwrite them, but he's got that existing loan that might be maturing in 2 weeks, and you got to find a takeout loan for him. I find that super interesting. And I've been in this business for over 15 years. And literally every single day, somebody comes to me with a loan request of something I have no idea, what it is, or if it's a light industrial space that furnishes, fiber optic cabling to, whatever, industry, and you're trying to just underwrite and understand, how am I going to put a loan on the property, and just learning about that industry, I find super fascinating. And then finding solutions for investors as well, because, they may be caught having to close super quick on a loan request because their existing conventional lender couldn't perform, or they've got something, again, we look at credit, but maybe they have something off on their credit that they can be corrected. But just finding that solution I find really interesting. So those are the top 5 reasons why you should consider jumping into the hard money lending industry or building up your book of business. If you liked this video and felt it was informative, give it a like, subscribe to my channel. I'm going to post a lot more content on things you can do to drive more business your way on the hard money lending side. Thanks for the listen.